Happy Wealth Wednesday, Scarlett. I'm so excited about what you are building and how you are creating access to a whole another asset class on chain and what that means for the world. So I would love to kick it off if you would share a bit about you, your story. Where are you calling in from?
I'm Scarlett. I'm the co-founder and CEO of Robinland. And what we're trying to do in one word is trying to bridge the gap between traditional finance and Web3 for especially the real asset or real estate industry. So we're trying to allow people invest in real estate with really, small pieces, very liquid fashion. So for me personally, I grew up in China and I went to Hong Kong for college. And I was a PhD in economics at Stanford, where I studied housing and real estate. So what got me interested in housing is really, China went through a huge housing boom from 2003 to 2013-ish. Prices in like first-tier cities almost quadrupled. So it's actually much higher than what we went through in the US from 1996 to like 2006-ish. And just watching a lot of people trying to own a house, but just couldn't because people have turned this, what should be a consumption into an investment product. And that made me started thinking about how can I use financial innovation to decouple consumption and investment? Because in principle, a piece of a house should be just something that, people, live in and then start a family in. But like it or not, it's also one of the best investment for a lot of people. So I wrote a paper about creating a derivative of the house price such that people who want to invest can hold on to this small derivative and trade it just like stocks while leaving the owner occupants alone. And people who want to own a house can even short this asset to hedge out their price risk. So that idea I really liked, but didn't know how to turn it into reality at that time. So after graduation, I went into Google as a data scientist. And during my time there, I came across their internal crypto group and realized that crypto is a specific realization of my dissertation. Because if you think about it, crypto assets are, small piece, very liquid, and they can in principle represent any underlying. So if you tokenize a piece of real estate, the resulting tokens are representations of the shares in that asset. For people who hold it, they can get the rental income stream or the interest income stream if it's a debt. So that's kind of what got me thinking about it. And I was lucky enough to have met my two co-founders. So that's what got me started with what I'm doing now and the backstory.
I would love to first start with like kind of the most basic essential thing, which is what was your first ever investment? Do you remember what it was and who got you started?
During when I was a PhD, I downloaded Robinhood. So funny thing is Robinland, the name actually comes from Robin Hood for land. So what we wanted to make is, something that's as successful as Robinhood to try to let people invest in anything. So at that time, apparently the reason why Robinhood is around is people used to use like E-Trade or, some other tools that are just really complicated. And there's so many buttons and you don't even know what those means. But then for Robinhood, you just download it and there's a bunch of stock and then you can just invest in it. My first investment was through Robinhood into the usual names that people all know about. And then that got me started to like look at more of the fundamentals, like following the news of the company, trying to figure out who will do well and what are some of the drivers.
You shared a little bit about this, but like how and why did you get into the space? What personally was driving you to focus so much on real estate in particular?
Yeah, so for me, really, it's I want to bring equity into the space, leveling the playing field, because traditional finance has been something that I personally was very, attracted to when I was an undergrad. So being in Hong Kong, it's the financial center of Asia, and everyone thinks of being in investment banking as sort of the best career path. So I was, part of that for a long time, but eventually decided that after I came to the US and as an undergrad exchange student, I wanted to do econ research more because I always wanted to figure out how society works, and especially for certain markets, what are some of the drawbacks and what I can contribute to. But while I was in investment banking, I sort of realized this is a game where institutions play a huge role. So even though you look at the market, people are trading through Robinhood, people can participate, but still the large institutions play a huge role in making the market. And if they want to collectively push a stock, they can, and then they can release information that actually goes in the other direction. So they have too much power. And especially given for real estate, there are some really high quality assets that generates extremely good return with very low risk. But because they're very large ticket size, say 200 million or even 20 million, most of the people listening to this wouldn't even be able to access that, right? And that's something that I don't like. You should not discriminate people based on how much wealth they have. People should all have a chance in getting access to all sorts of different investment products. I want to use a technology to level the playing field for people. And tokenization or crypto just seem to be such a natural next step, because the blockchain is all about transparency, being permissionless, and just distributing or having things decentralized. So that's why the idea of combining real estate with blockchain is just something that's so natural. And what we're trying to do also is allow people to invest in things that they otherwise wouldn't. Say this is a multifamily construction loan in New York with very low loan to value ratio, very low risk, and very good track record for the developer. But usually they would only source from real estate PE firms. But now with us, we'll get that project into a special purpose vehicle at SPV and issue on-chain crypto tokens that's completely legally compliant with the SEC rules, and then burn that contract into that token so that when you hold the token, you're having a share of the underlying asset in your wallet. And then every period of time, you will get paid however much the developer is paying us, roughly 8 to 10% interest every year. So that's the kind of product that we want to create for people, something that's very easy to access and very low amount of hassle. But we want to make sure that there is a version of that that's available for people to get access to, even with just a click of the finger. So that's what really motivated me and got me here today.
What I'd love to dive into more is how it actually works. I think there's a lot of criticism of Web3 and tokenization. Like, why tokenize it? So when you say part of the token has the contract, which is a connection to the SPV, which is enforceable, why put that onto a token? What does that mean when somebody buys that token from somebody else? How is legal enforceability transferred over to this new owner versus getting access to the SPV or transferring the SPV over?
That's really the power of blockchain, which is that it's an open ledger that's collectively being, keeping track of by, different nodes held in different places. So we will all know that person A transferred it to person B, rather than this being a private deal between them. And in order for the transfer to happen, they can just go to a security token exchanges. And those security token exchanges have ATS license, which is alternative trading license, that allows them to act as a broker dealer that takes, one person's share and transfer it to another person. And that will all be openly, recorded on the blockchain. You need to make sure that after the 1 year lockup, even when people start selling it to a non-accredited investor, there can be at most 2,000 non-accredited investor. And in the past, it's a hassle to keep track of that because it's in an Excel spreadsheet. But now with blockchain, you can just automatically write a smart contract to say, when there is another transfer that makes it 1,001, then I'll block that trade, right? So that's the power of using smart contract, because instead of having people to violate the law and then go after them to prosecute or punish, we can just write it in a piece of code to protect people, to make sure that people wouldn't even be able to execute a trade that goes against the SEC laws. So that's something that I think is really powerful. And another aspect of why putting it on chain is to access a pot of liquidity that are otherwise locked in itself, because we have $2 trillion, of crypto in terms of market cap, and it's already a systematically important industry in my experience. But because of it being stablecoin, it's completely isolated from our real economy that's denominated in USD. But in principle, there is no reason why the capital in USDC shouldn't flow into the real economy and vice versa, because what USDC holders are looking for is also sustainable and high yield. In the past, it's supported by yield farming activities on chain, but those are not sustainable. It eventually converges to zero, and it has over the past few months with the market collapse. So everyone now is trying to look for the next thing that generates them sustainable yield in the on-chain environment, because they don't want to off-ramp. But it's very hard for them to find those. And that's why we are here to provide a crypto bond product for the first time in history that fills in this gap, so that people holding USDC can have also portfolio diversification, not only in stablecoin that doesn't generate revenue, or not only in meme coin that have real high upside but potentially very big downside. They have the option to put it in something like us, which is supported by activities in the real world with, actual use of the capital that generates them 8 to 10%. So that's another reason why we want to put them on chain.
I love that. And what do you believe is the most exciting thing that you've learned that you would want others to know?
Try not to be driven by the trend too much, because there were a period of time where when we pitched the idea to VCs, especially crypto VCs, they're like, blockchain is not built for anything that's off-chain, because as soon as you go off-chain, there's the legal, there's operations. It's just very ugly, right? And we don't know how to deal with that with things that are not native to, a piece of code. And this idea has been around for crypto for a long time until recently, when there's real demand for yields from real asset. And all of a sudden, everyone's attitude changed. All of a sudden, people are like, oh, there must be some ways we can solve this. And we would love to try some basic version where you have some solution for price oracles or, on-chain sort of verification of the ownership. And this is really interesting because as soon as there is demand, all of the obstacles that look like technical or mechanical all went away. There are ways to solve it. So if you believe in a vision, if you believe in the actual need of something, you should try to push for that, because there will be a time when people realize.
Is there a person or a company that's really inspired you in the space to keep that endurance?
Yeah, so for me personally, I actually thought what Elon Musk has been doing is pretty cool, just because, sometimes I feel he's kind of living in the future, kind of like that, right? He's trying to push for, Tesla, which is an electronic vehicle, for a long time, when people are like, this is never going to happen because there's just not enough support, right? You need places for people to charge. You need a whole different environment, and also for like self-driving. But as we go along, especially given the gas price we're seeing today, he was right to some extent. People wouldn't really, buy into that. But I think if you truly have seen the future, try to push for that. And for him, it was like a decade long, right? And finally, it's sort of, this is time. For us, maybe it's similar, like maybe 5 years, when crypto really embraces real estate. But we will all be here to try to, keep pushing that vision forward together with other folks in this field. Yesterday, we actually just held a Twitter space with Balcony DAO, with Honeybricks, with Theo Petro Labs, which are all industry leaders in the real asset on chain space and tokenization of real estate. And all that we are talking about is we really should join forces, try to advocate for this field in general. And I think, there are still a lot of challenges that remain, like legal-wise, operational-wise, financing-wise, investment-wise. But that's the reason why we're here. That's why we want to all be here and go through that together.
And what advice would you give to somebody getting started?
Real estate is something that's very heterogeneous. There's no one thing called real estate. There is commercial, there's residential. And even among commercial, hotel is different from garages, different from an office building, right? And then there's different geographic locations that are all different. And there's debt versus equity. So as soon as we start talking, if you have like all three of those, cross each other, we now have like maybe 50 different categories. So I think trying to understand the fundamental is really important, because a lot of those platforms might look very similar to each other, which are all fractional real estate investment, but try to look under the hood and understand what's the underlying asset that you're dealing with. Because after all, the token or the shares, it's all just a representation, it's all a veil. And what you're getting access to really is the underlying asset, and try to make sure that you're getting access to actually a good asset. And understanding that location or the economic fundamental is something that is actually very important. Tokenization is good, but it doesn't really replace our own due diligence.
Do you have any great resources that you've liked personally?
There's a forum called biggerpocket.com. People talk about real estate investment in general. There's a lot of YouTube or Twitter accounts that constantly talk about real estate investment. So in general, just like immersing yourself in the space, trying to get information. I think the good thing about living in 2022 is that most of the things are out there on the internet somewhere. Just takes time to try to find those, and constantly trying to educate myself and be comfortable with those.
And I would love to just end off with, how can we follow you yourself as a founder as you build, and your co-founder Venus? And how can we also learn more and stay connected to Robinland as you get prepared for launch, I think, quite shortly?
Follow our progress on our Twitter the handle is Robinland.io, and the website is actually Robinland.io. So it's relatively easy to remember. And on our website, you will also find all of our social, including community. We have Discord and Telegram, and we constantly post updates there to keep you updated on what just happened, what we've accomplished, what are the roadblocks, when should we expect to see our product. So we're all like very excited about the launch in August or September this year. So it will be a construction loan multifamily in Brooklyn, New York. And it's a very, very healthy product. We were actually just talking with one of the VCs that invested in us called Agaya. And one of the founders is from Blackstone. And after seeing the terms, he's like, wow, this is a really good product. If you're interested, please let us know by putting your email to claim early access on the website, so that we can send you more information. And would love to keep you in the loop by having you in our community, Discord and Telegram.
Brilliant. Well, we will definitely be following along. Thank you for sharing your story.